Bharat, good afternoon. Why, the kind of sell-off we're witnessing in Tata Motors, is it, just a bit of a correction after the kind of rally that the stock saw? Or are there some fundamental issues as well that are being factored in?
So good afternoon to the viewers. I think fundamentally we were cautious on the stock, and nothing has improved on the ground if we see in the fundamentals. Brexit had been delayed by about 6 months or so, so I think that was the reason why stock saw a bit of an up move sentiment, because that was a sentimentally positive. But having said that, the fundamentals still continue to remain weak, and now we are seeing the adverse news coming in. As you rightly pointed out, US-China trade deal may not work out as the indications that the market are getting. So China is an important market for JLR, and if the US-China trade deal doesn't work out, then Chinese economy may further have an impact. So that is getting reflected in the stock price. So JLR was continue to remain, and we continue to remain cautious on the stock.
The diesel statement which has come in and how things are panning out there, that doesn't have much impact on the target price, right?
Yeah, diesel would not have that much an impact on Tata Motors, because the domestic business is still very small compared to the total, and even if we take passenger vehicles in that, that's still a smaller proportion. So overall, I think diesel passenger vehicle part in Tata Motors revenue will be just about 3 to 4%. So that does not, kind of change much as far as the financials are concerned.
How is the company placed given the very massive slowdown that continues to reel the industry domestically? Even abroad, we it's no secret anymore about the kind of slowdown JLR has been hit with. So how is it likely to shape up amid all the slowdown, the earnings growth for the company over the next couple of quarters, given that the management is trying very hard to imply a lot of execute a lot of cost-effective, cost-saving measures. They're trying to really hard to turn around JLR as well. They've been time and again saying that as well. But how is it likely to shape up? Do you think those the cost-saving measures will sort of bear fruit?
Yeah, they can, but the biggest problem is that unless and until the volumes pick up in the automotive industry, volume growth is very important, and unless and until the volume growth picks up, the cost control measures do not have a significant impact on the performance, because the volume pressures there, then the cost structure is very adversely impacted if you do not have volume growth. Discounting is high, the cost structure, operating deleverage is there, and a lot of players tend to then, in a slowing market, give discounting and be aggressive. So that impacts the overall profitability. Having said that, cost control measures will have some kind of an impact, but that tends to get diluted in the event of a volume slowdown.
Right, Bharat, thanks so much for giving us. Just before we let you go, just update on the auto pack. With the sort of correction that you've seen, you think auto companies, at least select ones, are coming into value attractive zone?
Yeah, there may be some very selective plays like in the automotive OEM. M&M is the pack that we are positive on, because a lot of the slowdown has been factored into the price. But the other companies, we are still cautious, because we seen the volume surprise on the negative front will still be there, and in a slowing industry environment, the discounting and stuff goes, the cost pressures are very high. Plus, auto industry also has the impact of the upcoming regulatory changes. So ABS, CBS norms have kicked in for two-wheeler and four-wheeler. Then we have a very big change coming in the industry from BS4 to BS6 norms that will see the impact from Q3, Q4 of this year. So I think the regulatory, there is a lot of uncertainty still, and the volume impact there's a little bit more pain, I think, left. So very selectively in automotive OEM, we are positive only on M&M.
Right, Bharat. Thanks so much.